Hi, everyone. My name is Koby Kushner. I'm an analyst at Red Cloud Securities, and I'm joined by the Greggs. They just listed very recently, congrats, for their company, Grounded Lithium. And they're an Alberta headquartered company, and they are focused on delineating and eventually commercializing lithium brine resources in Saskatchewan. So, to kick things off, we'll start off simple. You guys, both of you, have a long history in Saskatchewan. So tell us about that and tell us what made you guys pivot over to lithium in Saskatchewan in particular.
Well, we've always liked working in Saskatchewan, but we like to say that we didn't choose to go and work in Saskatchewan. Saskatchewan chose us. We started off just doing our homework and following the rock. Where does this make the most sense from the perspective of where are we going to find high lithium in an area that has great reservoir for providing storage for the brine and also deliverability? And we start to follow that. We also start to look at, well, where is it the easiest to get to by it being shallow? And that led us to Western Saskatchewan. So Saskatchewan chose us. And we just followed the rock and did our homework.
And, you guys have an oil and gas background. So dealing with liquid resources is totally different than dealing with, traditional hard rock resources. So tell us about the overlap and between lithium and brines and oil and gas and how that benefits you guys.
Well, it's a very interesting question because this is mining. But at the same point in time, it has a lot of overlap with the technical skills that you would use in oil and gas exploration and development. So we've drilled our first well, and that rig just came from an oil and gas operation before it drilled our well. So it really takes advantage of the skill sets that we've built over decades working in the oil and gas industry, and now we're making a shift into the mining industry.
Right. And, you leveraging what you guys know about oil and gas, you've managed to move quick, and you've put out a maiden resource at your flagship Kindersley project. Tell us about that resource.
We very quickly identified this area by looking at our geology. And then when we started to follow that through, we also saw that this area had great qualities in terms of it being shallow. No oil in the reservoir at all, because that's something we'll need to filter out if we had it. And there's evidence already there from wells that have been tested and have strong lithium concentrations. And those wells are built for purpose for water flood. They're extracting water to use in a water flood in an oil reservoir. And those wells produce at very solid rates. And when we look at those wells, we realize that we can get a lot more brine out of those wells than that they are doing today. And hence, that's why we drilled one of our wells.
So you guys, leveraging your oil and gas experience, you managed to move quick, and you've already put out a maiden resource at your flagship Kindersley project. So tell us about that resource. It's a pretty sizable one, right?
Yes, we rapidly accumulated as much land as we could through crown and freehold acreage positions, and we needed that land position to create this resource report. The land acquisitions were very targeted for what we wanted, and we've been working with building out what would the resource look like by doing a lot of technical work, detailed petrophysical analysis, three-dimensional modeling of the reservoir, and then that allowed us to do the extraction and hire an independent resource auditor to give us the 2.9 million tons of lithium carbonate equivalent inferred resource on our lands. And we're proud of that number, not just because we like the number, but we're proud of it because of the technical that we put into it. There's a lot of rigor that went into generating that number, and we're proud of that number in terms of getting it across the goal line.
Yeah, that's a huge resource.
And well, we're not going to do another immediate resource report, but we put out a press release on Wednesday of this week that we've just added more land. Well, with more land will come more resource, and we'll continue to grow the company.
That kind of leads into my next question here, Greg. My understanding is that the resource spans only a portion of your total land holdings, right? So, is there similar resource potential across your other land holdings?
Not this big, because the land holdings aren't that big. We own a total of 284 square miles of mineral lands. Then inside the report that we generated is only 215 of that 284.
Right.
We just added 34 more sections to increase our land position in the core Kindersley project to 250. But we still have another 34 sections outside of this area that we will look to expand and build on in the future.
Right. And when dealing with liquid resources, is this something I think the mining guys need to wrap their head around, is that it's more homogeneous, correct? So it's...
Yeah, there will be variations, but the variations will be within a very narrow range over a broad area.
Right. So I guess from my point of view, I look at your resource per section type of thing. I would imagine that you would have similar numbers for any ground that you add on a resource per section basis. But
that's our goal, yes.
Right.
And so we would achieve that with the land that we just acquired, but we have to go out and do more technical work, more field work to justify inferred resource reports on some of the other land that we've acquired.
Gotcha.
If I could just make a comment on that, Koby. We don't have all the lands assessed. This is where it gets into a compelling value proposition from a stock perspective, that value may not be recognized by the marketplace on all the lands that we own. So the market's assessing us on 215 sections, 2.9 million tons. There's other lands that have, to Gregg's point, the same homogeneity that would be not recognized in the value of our stock. For sure. And I look at a company like Grounded, and on an EV per ton LCE, already you're trading pretty low. We're inexpensive compared to our peers. Right.
Yeah.
Right. So, as we mentioned before, you guys have moved pretty quickly in a short amount of time. You're only 2 years old. So tell us about how much your land package has grown. And are you going to continue to add ground, or are you kind of done right now?
In the words of one of our board members, we don't need more land. But having said that, we want more, because it'll give us more and more projects into the future. So when we started this, before we went out to try to raise more money, the founders put in their own money, and we acquired a position of 34 sections in the greater Kindersley area. We then started to raise more money and also went out and acquired more land through crown land sales, freehold land acquisitions with major parties that are pleased to be doing this business. Prairie Sky Royalty, they've never done a deal like this before. This was their first one, and it was fun working with them because they were so pumped about doing this transaction. So through time, we've grown it from that initial 34 sections to 284 through working with the Crown, buying Crown lands, and then also doing it through freehold land acquisitions.
So, you mentioned before about how you guys drilled your first well. So tell us, what was the purpose of this well? And do you plan on drilling more in the near future?
Great question. We see the play economics will be driven by, one, lithium, what's your grade, and two, how much of it do you have underground? Then it becomes a big part of it is that how much reservoir do you have underground to contain all this brine? And then lastly, deliverability. We have to process a lot of brine, so we're going to need high volumes coming out of our wells. Well, we know, looking at this rock, it'll produce large deliverability. But in terms of the marketplace and justifying this to our future audits of our resource, we need to demonstrate deliverability. So the purpose of this well is, yes, we will test for lithium concentrations, but one of the big things we want is what's the deliverability. So we will flow this well at a number of flow rates at different drawdown pressures, and that'll tell us what the ultimate capability of this well will be when we put an electric submersible pump downhole.
Maybe just to build on that too, if I could, Greg.
Yeah.
That was our own test well that will become a producer down the road. There are a number of other wells that are re-entry candidates, reactivation candidates, owing to the oil and gas activity and industry in and around our area. Those are cheaper events, so our dollars go further to do those kinds of same tests to prove the concentrations and to prove deliverability.
Gotcha.
Making best use of our pennies.
Gotcha.
So the well's been drilled, but it has not yet been completed, and that'll start probably later this month or early October.
Okay. So yeah, there's a big emphasis on deliverability, and when it comes to the Western Canadian lithium petrobrine companies, I find myself often needing to explain to investors, especially mining investors, how grade actually isn't king. Having good deliverability is usually what tends to matter more. So, you guys are strategically located along the Leduc. What does that mean in terms of deliverability? And while we're on it, how do you measure deliverability, and what factors go into that?
Well, we strategically located in this area because we did a lot of regional mapping. And when we were doing the regional mapping and beyond looking for what will concentrate where the lithium is going to be trapped, we also wanted to see thick reservoir with good porosity. So this is one area that we flagged that has those elements, and we wanted to pursue that in this area. We started to look at some of the existing well control that's in the area, and we saw wells that were producing, up to 5,000 barrels of brine a day. But when we as industry professionals look at those wells, we say, well, that's a great result, but that's all they wanted. We need more, and we know if we drill it, complete it, and equip it in the right manner, we will do a lot better. And we will prove that with this well.
And that's really your bread and butter, right? Like from your oil and gas days, if I recall, you were Saskatchewan's oil man of the year. Is that right?
Yeah, in 2009. I get to take credit for a lot of work that other people did.
Yeah.
Because I was leading the company in this group, but they cracked the code in terms of how to drill and complete the Bakken play.
Right.
And that led us to be very successful and drill a lot of wells based on those concepts. And in much the same way, it's bringing together all aspects of what we do in terms of the geology, the geophysics, the engineering, the drilling, all of that to achieve those results. So we're really applying that same thing to this. How are we going to determine that maximum result? And we feel that we can do this out of vertical wells in this area. And we don't have to drill horizontals, which really starts to increase our cost basis to access the brines. So we believe we'll be able to do this through vertical wells.
Right.
And that's what we will prove with this first well that we drilled.
Okay. So I think we're getting to, we've really established why deliverability is important. It really plays into your cost at the end of the day.
It does.
So let's talk about project economics. What do you guys envision for your cost and your margins?
Well, we're not out there publicly in terms of the margins, but what we can say is that this deliverability is important to us because the higher the deliverability, the fewer number of wells that we need to actually drill to feed into our facility. Very early on, when Greg and I first sat down and started working through this, we wanted to understand, is it economically viable? And we built our own economic models with assumptions about what our costs would be. Now we're starting to flesh those costs out a little bit more solidly now, but what would those costs actually look like for us to do this as an economic project? And when we started this 2.5 years ago, the price of a lithium salt was $9,000 US per ton. And what's happened since then is that the price has risen dramatically. It's now in the range of $65,000 per ton. We don't know what we will be selling our product at, but that rise in the commodity price provides us great torque in terms of being able to move our project forward and the economics that'll eventually be portrayed behind it. We're very excited by what that can do for us in terms of building initial facilities, establishing cash flow, and then launching into the next series of facilities and drilling to feed into that growth of our company.
And then if I could just add on that, from an investor point of view, the fact that you have, substantial margin expansion, that accrues to the bottom line. So that affords you, when you're building multiple projects, to build those projects with cash flow generated from the previous module. So as I say, return on capital employed, or ROCE, the return on capital employed, which accrues to the investor, becomes very robust. And we're all about investors and investor returns, and hopefully if those things are all doing what they're supposed to be doing, the value of our business should increase. So from an investor's perspective, I come back to, we have a compelling entry point for all the things that we're working on that investors can do well by owning a stock of GRD, or a share of GRD.
And we believe in the story, and we invested every round.
Okay, that's good context. And I think I appreciate your modesty there, but I mean, for those listening in, for context here, you grew an oil producer's production by over 20,000% by targeting lands that you knew had good deliverability. Is that correct?
Yes, and testing the idea as you went, so that it's that measured, how do you build your land position? And a key part of being successful in resource industries is being an early mover.
Right.
Identify where you want to be based on your technical knowledge and get in there early and acquire as much of that resource as you can. And that's been our modus operandi, if you will, in this area. We identified what we liked, and we've been aggressively pursuing, building our position and building up our technical demonstration of what we can do with the assets.
Right. And now thinking longer term, to tap into your lithium resources, you plan to employ DLE technologies.
Yes.
So what is DLE? What are the benefits? And have you begun your search for a DLE technology provider, or is it still too early days?
Well, DLE is direct lithium extraction, and it's really a two-stage process where you're going to extract the lithium, and then you're going to refine it or polish it into a lithium salt, like lithium carbonate. And there's an abundance of technology providers that are trying to come into this market and be the technology of choice to extract the lithium. But having said that, it's been around for a very long time. Over 50 years, how to take it out of the brine has been around. Livent's been doing it for a very long time. And so it's not new. It's just making it commercial. Who is going to be your technology provider of choice? So to that end, we've brought in a consultant, PhD in chemical and process engineering, and he's worked on other DLE projects within Western Canada already. And we're going to employ his skill set to help us with when we hire an engineering firm, which we're close to doing, that will help us do the evaluations and then help us understand how to scale that up to pilot and eventually a commercial production stage.
Right.
I think Koby, an important point to mention to the listeners and the watchers is that when Gregg and I started this company, we did not want to be seen as a technology company. We are good at resource development, stay close to our knitting. We're okay with letting others, as we say, stand on the shoulders of giants, of others who are far smarter when it comes to process technologies. Sure, we'll have people that'll help us select, but we don't want to put hard-earned shareholders' dollars into R&D. We'd rather put that money into the ground, because when you're building a resource company, you build more value by putting it into the ground, into R&D. So that was a fundamental concept when we started Grounded Lithium 2.5 years ago.
Yes.
And I agree. With there's well over 50 companies, DLE companies now all trying to achieve the same thing. So even if you develop your own thing and your own technology in-house, who's to say that you want to go with the best one? You don't want to
exactly.
necessarily go with the one that's in-house unless that one happens to be the best one. With over 50 companies doing the same thing, what are your chances of making the best technology from scratch? So
yeah, as Gregg said it, we want to stand on the shoulders of all these giant, big brain people that have been working on this.
Sure.
Having said that, a lot of the technology companies, they're test tube and beaker guys. And we're going to need to have that strong engineering company sort of working with the technology company. How do we scale this up to something so big that we can process that much brine that quickly?
Right. And DLE as well, it has its benefits. What can you tell us about the environmental footprint compared to the alternative, which is, evaporation brines?
Yeah, it certainly in other parts of the world we see these large evaporation ponds. And some of them are 5 kilometers by 10 kilometers across. They're huge evaporation concentration ponds, and they come with their own problems. Now, we're happy. We're working in Canada, and in Canada, that would never be allowed. So we're not going to do that, and let's be blunt, we're not going to do a lot of evaporation in Saskatchewan in the middle of winter.
Right.
So that we had quickly identified it has to go to DLE. And Gregg and I have both worked in companies that had technology, resource companies that had technology, and we did see that the R&D took away from investing in the resource. And we want to be very clear about what we are. And when we sat down and started talking about this from a strategic perspective, that's what led us to the name Grounded. We wanted to be very grounded in our thinking and how we approach the business.
Just to add, I think the whole ESG movement in the investment community and business world is very important. And when you have a surface footprint that is substantially less than other known ways of producing lithium and satisfying the market, we believe that should win the next investment, the marginal investment dollar, by having one that does have an ESG angle, environmentally friendly.
For sure.
We realize the investment community is looking for greater proof of concept from DLE, but part of that's, it's been very strictly, tightly controlled by a few companies, and now it's just expanding out. It exists, it works. It's just a matter of whether it's us or some other company employing DLE to demonstrate that and remove that perceived risk.
Right. And, last question here, and I think this one's more for Gregg with 2 Gs.
2 Gs versus 3 Gs.
So tell us about your financial position, your capital structure, and who your investors are.
Right. So very happy. We worked closely with Red Cloud Securities to secure our first round of external financing. That was done over the course of the fall of last year and the spring of this year. Our disclosed numbers in our information circular was $4.7 million in cash. To some of the comments that Gregg's made, we have used that to put it into the ground to drill our first well, to acquire land. All that said, we're still in a very healthy cash position. Working capital reserves are sufficient enough to take us through a number of near-term catalysts that you'll see news flow in the coming weeks and months on us delivering on our promises to have concentration testing, deliverability of the wells, potentially tying up more land, et cetera, moving towards lab pilots and field pilots. So we're very happy with our position, very happy with the advice and help that Red Cloud provides to get going. Clearly, we need to raise some more capital as we're going through our development plan. The shareholders we have are loyal. We're investors. We've invested at every single round of this company. We own about 14% of the stock. So we're definitely aligned with shareholders and look forward to communicating positive results with them going forward.
Awesome.
Yeah. A lot of the near-term catalysts that Gregg's talking about, it's just our business plan. Our business plan is to keep moving forward quickly. We've moved forward quickly in the last 2 years. And as we move forward and we generate results, we look forward to communicating that to our shareholders through time. So as Gregg likes to say, we will have a cadence of news to our investors.
Great. So with that, thanks guys for joining me, Gregg Smith and Gregg Phaneuf.
Phaneuf. Like the hockey player.
Well, yeah, thanks guys for joining us. This is Grounded Lithium. I'm Koby Kushner, mining analyst at Red Cloud. Thanks again.
Thanks,
Thank you,
Koby.
Koby.